Have you ever stared at the stock market chart on your phone or TV and thought, this looks like a foreign language? Or maybe you've heard people say things like, I bought Apple at $90 and now it's up 300%. And you wonder, how? Here's the truth. Buying your first stock doesn't require a finance degree or thousands of dollars. It requires just two things, a curious mindset and a game plan. And in this episode, we're breaking it all down, step by step. Welcome back to Money Mindset Hub, the podcast that turns confusing financial lingo into real-world knowledge. I'm your host, Raul Sofa. And today, we're diving into the basics of how to buy your very first stock. Let's get started. Before we get into the how, let's talk about the why. Let me tell you a quick story. A friend of mine, Olivia, worked at a coffee shop. She'd saved $500 and wanted to invest but she didn't know where to start. A year later, she told me she had bought a single share of a company she believed in, Nike. She didn't get rich overnight, but what she got was even more valuable. Confidence. Confidence to learn, confidence to invest more, and confidence to think beyond paycheck to paycheck. That's what buying your first stock can give you. It's not just about profit, it's about progress. When you buy a stock, you're not just clicking a button, you're becoming part owner of a company. Whether it's Apple, Netflix, or a company that makes solar panels, you are putting your money into something you believe in. Let's break this down without the jargon. A stock is a share of ownership in a company. Think of it like owning a slice of pizza. The whole pie is the company, and your slice is your share. When the company does well, your share can grow in value. If it pays dividends, that's a fancy word for profit sharing, you might even get paid just for holding it. But yes, it can go the other way too. Stocks can lose value. That's why step one is to understand the risk, and why we always say, invest what you can afford to leave untouched for a while. Now let's get into the step-by-step. Let's talk real steps, because theory is great, but action is better. Step one, choose your broker. A broker is a platform that lets you buy and sell stocks. Think of it like the App Store for investing. Here are a few beginner-friendly ones. Robinhood for US users, Webull, Fidelity, TD Ameritrade, Wealth Simple for Canadians. Look for platforms with low or no fees, easy-to-use apps, and good educational content. Step 2. Open your account. It's like opening a bank account. You'll need your ID, Social Security number, or SIN in Canada, and a funding source like a bank account. Once your account is verified, which can take a day or two, you're good to go. Step 3. Fund your account. Transfer money into your brokerage account. It doesn't have to be a lot. $100 is more than enough to get started. Step 4. Research your first stock. Pick one company you understand. That's key. If you use Spotify every day, or you're obsessed with Starbucks, consider starting there. Look up the ticker symbol. That's the stock's nickname on the market. Check its performance. Read a little about its mission and decide if it aligns with your values. Step 5. Place your first order. You'll see options like market order, buys immediately at the current price, limit. Order, buys only at the price you choose. For beginners, market orders are usually fine. Hit, buy. Take a deep breath, you're now a shareholder. Congrats. So now what? You bought a stock? Are you done? Not quite. This is where mindset comes in. Stocks are not lottery tickets. They are long-term investments. Here's what you can do after you buy. Track performance. Not obsessively, but maybe once a week. Keep learning. Read the news, follow earnings reports, or listen to podcasts like this one. Don't panic sell. Prices go up and down. That's normal. Set a goal. Are you holding for a year until it doubles? Or are you investing monthly? Pro tip. use a journal or app to write down why you bought the stock. Your future self will thank you. Now let's be honest. Mistakes happen, but you can avoid the big ones. Here's what to watch out for. Chasing hype. Just because a stock is trending doesn't mean it's a good investment. Investing money you need next month. The stock market isn't a short-term savings account. Ignoring fees, always know what you're being charged for trades, for transfers, for inactivity. Not diversifying, don't throw all your money into one stock. Eventually, spread it out. And most importantly, don't be afraid to start small. Small steps lead to big momentum. Buying your first stock is more than a financial move. It's a mindset shift. You're saying, I believe in growth. I believe in taking action. I believe I can learn. No one knows the perfect time to buy, but the best time to learn is always now. So whether you're listening on your commute, during a walk, or while making breakfast, let this be your sign. Open that account. Start with what you have. Invest in what you understand. And remember, you don't have to do this alone. That's why we're here, Money Mindset Hub, to guide you through every step of your financial journey. Like this episode if it helped. Subscribe for more easy-to-follow financial breakdowns. Hit the notification bell so you never miss an episode. Until next time, invest smart, stay curious, and take care.